Guten Morgen. Happy Monday, everybody. Let's get on with it. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Why? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Guten Morgen. All right. So what's going on in your world? A little coup? Little coup never hurt anybody. Well, actually, that's not quite true. But anyways, I spent all Saturday morning glued to, well, actually mostly my phone, and a little bit of my laptop, and trying to plan, make contingency plans for how the market was going to open. And Will the Wagner Group, or as they say in America, the Wagner Group, will they get to Moscow? What's going to happen then? And then by lunchtime, it was all over. Okay, now. So that was that, and then the markets opened, and no big deal, it seems. So anyways, an interesting Saturday morning. So anywho, here we are, the last week of the first half of the year. Very cool. On July 7th at 10:30 in the morning, New York time, we are going to do the Q3 outlook. So that's being developed and presented to you very, very soon. We can start the second half, so I'm looking forward to that. There's some other really big things happening at QuantBox, but also at FX Bootcamp. And you'll find out about that very, very, very shortly. Just in days. Very, very shortly. So lots of very good things happening. Progress is being made. Yeah, countdown to it. So anyway, so what are we going to look at today, this week, all that kind of stuff? Well, we do have some durable goods, and we do have some Canadian inflation data, and we do have some real estate intel. But I think it's pretty much the end of the first half. This is the end. Huh? And he walked down the hall. So anywho, so it's going to be an interesting week, and then holy smokes, we're going to have a great second half. Very interesting second half, I imagine. Okay. All right. So if you look in the description below the video, there's some links I want you to pay attention to. One of them is a link to a webinar recording on how to triple your profits, possibly, without changing anything on your charts. If you're an Elliott Wave person, great. If you like moving averages, great. You like pivot points, great. You like oscillators, great. Is there a secret tool that you need? No. No, you don't need to add anything to your charts. In fact, you can end up spending less time on your charts. And there are 3 things to know about how to do that. And that webinar explains the 3 things and how to get those 3 things for free. I think you should watch it. That's in the description below. There's a link to FX Bootcamp. Like I said, some pretty amazing things about to be launched for FX Bootcamp. And those things will only make it better. Check it out, fxbootcamp.com. You can become a member for $88 a year. There's a link to quantbox.co. Check it out. There's a link to Trader's Way. What's Trader's Way? An ethical foreign exchange broker. Like a business model, an ethical business model is what Trader's Way uses. And so they earned my loyalty and respect, I think it was about 8 years ago. And I recommend that you check them out. You can go to tradersway.com. You can click on the link in the description. You can go in incognito mode so nobody knows. That's fine. That's fine. Is there a code you have to enter so I earn a commission or something? No. Do you have to click a link? No. Am I an affiliate? No. Go check them out. Do you have to tell them Wayne sent you? No. Just check them out. Do your own due diligence. Open up a demo account. Make some practice trades. Fast execution speed, narrow spreads. It's all good. So all those resources are available to you, and including a book I wrote back in 2008. And a new one, hopefully, will be out early in 2024. The first of 3 coming out. Maybe I can do all three in 2024. I don't know. Depends on what else I'm doing. So these are the longer term indices. And you can see Japanese yen is continuing its downfall. That's cool. So we'll check out buying yen pairs. Dollar was weak, then it rallied up in May, and then by June hit the 618 and has come back down. And now we're in that period of time in which it needs to decide up. Now, quantbox.co will show you the seasonality of that so that you can say, I wonder if this purple area is going to hold a support, and then suddenly dollar gets strong. Well, you know, bears, those are already decided if they're a bear or not. They're already pointing this down. Okay? But what if actually the future brings us up? Well, seasonality will help with that. Dollar down would mean stock market up in most cases. So are you thinking S&P 500 goes to 5,000 or drop below 4,000? Well, your answer to that will dictate up or down here. And if you're like, I don't know about any of that, well, then you're going to struggle. Because you don't even know the rationale of your trade. So, yeah, okay. Now this is interesting. We went below the trend, right, to the upper bounds of the downtrend. We came back to the median of the trend, and it's kind of interesting. The longer it takes to fall, the more likely it's going to start working its way that way. Sure know what I'm talking about? Oops. Okay. We don't know, but that could be developing the longer it takes. Someone says, hey, when do I do off the charts with Wayne McDonald? I have a few things that I'm cooking right now, and the kitchen's quite hot. But once that's done, yeah, I'll have available time to start that project back up again. So, yeah. How many people would like a podcast of me interviewing other traders and investors? Would you subscribe to something like this? See, I got going. And I just had to put it on pause. Yeah, I'd be interested in doing it too. That's the whole point. Yeah. Anyways, Great British Pound here. How many people read the Commitment of Traders report over the weekend? CFTC.gov. Commodity Futures Trading Commission. Commitment of Traders Report. Here it is. Canadian dollar. So QuantBox looks at this, by the way. Swiss franc. See? British pound. It's beautiful, right? Japanese yen. Asset managers, long, short. Leveraged funds, long, short. Okay? Very cool, right? Look at all the positions and changes in positions. Very cool. Okay, euro, British pound, wonderful. Look at all this wonderful data. And it's showing you what funds are doing, so on and so forth. Beautiful, right? Gorgeous. And here's the S&P 500. So you might ask, like, Wayne, where does QuantBox get its data? Here it is. Here's one example. And so if you go to QuantBox, quantbox.co. Oh, I have to log in. Master. And I don't think I'm in the right account. No, let's see if it'll let me switch. Boom, easy peasy. Okay, so instead of looking at this and following how managers are positioned in the market, you can look at our smart money tracker. And you can see there's 25,000 new contracts long in the Great British Pound. And I'd like to thank the American government for gathering that intelligence for me so I can formulate strategies. 25,000 more contracts long the Great British Pound. And at the same time, less contracts short. There's less bears and more bulls. Yeah. What do you think? Relevant? Oh, faux show. Golly, Batman. Please, just call me Wayne. All right. Little kitty cat bouncy bounce bounce. If I go back weekly, you can see what I did to look at the bounce. We can tighten this up a little bit. Okay, and you can see what I did. Luffle tulumum. So as long as we're making higher highs, you can buy higher lows. What do you stink? Smell like plans? Smells like a lot of plans to me. Huh? You say, well, I guess for now I'm bullish on the Canadian dollar. Why? 'Cause watch, I'm working on my American accent. That's bullish, huh? Yeah, that's pretty good, right? Yeah, anyway, so Japanese yen, definitely Oscar Mike on the move. Euro, definitely Oscar Mike on the move. Swissy, Oscar Mike. So on, CAD on, pound on, euro on, Swissy on. Stay away from Kiwi and Aussie for now. definitely short some yen, and you'll figure out dollar in a bit. It might be the best thing to do next week, bruh. All right, so let's take a look at euro yen, pound yen, Swissy yen, CAD yen. You follow? All right, so let's go to the yen-yens. Okay, and what do you think? If there are bears in this market, and I've already looked at this from a bearish point of view. I'm not a bear, by the way, but I'm very well aware that it can become bearish very soon. So you need to be buying on this 21 or selling lower highs or double tops. I wouldn't come a bear until this double tops. But notice, like, if you were going to be a bear, okay, 183 is where you'd be a seller. And you can see bears did sell it. So I have to be aware that there are bears. I don't like their trade, but it doesn't matter. They didn't ask me. So a bear is going to take a shot. I think it's way too aggressive. I'm a trend trader, so I'll always buy these dips to the 21. I mean, really, it's what? It carries a level of importance. Let's just put it that way. Okay? I mean, imagine my yacht. The name of it's going to be, 21 EMA. That's going to be the name of my bot. Ride the 21. Okay. Anyway, so if you're a buyer of this, you've got your dip. It's in the game. It's in the groove, and we're targeting this week. We'll call it 185. So let's look at a smaller time frame, and it's got to get some up. Okay, this is the buying zone for the week, and your target is, like I said. So, only 300 pips, but that's good enough for the girls I go with. Okay. So anyways, but if bears are going to show up, I would recommend to a bear, wait for a reversal pattern, get your double top first. Like, look at over here. That's what they did over here. They sold in an uptrend. I don't ever like that. And then it eventually doubled, even triple topped, and then fell Tuesday. Where did it fall to? Yeah, buying zone, and then it worked its way back up. I think a bear could learn a lot about that. And the biggest thing that a bull should worry about is if it double topped today, and then Monday, Tuesday, Wednesday, we work our way all the way down to 180. So instead of 300 up, it goes through 200 down. Then it would rally all the way up to here. Once again, like 182. Then it would drop. It's confusing, right? Then it would drop all the way down here to 79. Oh, God. What did he just say? Yeah, well, let's do it this way. Okay, up, down, up, down. Okay. Up. And down. I'm not saying that will happen, but golly gee whiz, it could happen. But I am a bull. Let me say it again. I am a bull. Okay? But I can't be a nink cow poop and not see that there are bears in the arena. Okay? So instead, I'm hoping to buy it at 82. and drive it up to 85. Okay? But that's the easy part. Knowing when you're wrong is much more important. All right. So here we are. This is bullish. I am in it. I do have 150 pips locked in. You can see 100 and... Wait, that's not 150. That's 105. Oh, okay, my bad. I said 150 earlier. I have 100 pips locked in. Worst case scenario, Hundo PIP. But I'm going for more, brother. So I can actually move this now. This is my stop. And if you recall, I set it at 333. But because of this week, okay, being a central pivot rally, I can move my target up another 40 or 50 pips. What do you think about that? Trying to see the price. I'll move it up to 110.50. A little more. Hey. Cool, right? Okay, we already knew CAD looked good by comparing the CAD index with the Japanese yen index. Hey, how do you get Wayne's currency indices? Does anybody know how to get the currency indices so you can look at the CAD index? You're like, what CAD index? How do I get the CAD index? You join FX Bootcamp. It's included with your $88 annual fee. No, not monthly, bro. Annual. Hey, that's not bad, right? Cool beans. Okay, QuantBox said, nah, don't be too excited about this one. And also, technically, you can see the other ones that are bullish are way up here. And QuantBox is kind of neutral to bearish almost on this pair. And it's hit target and is stopped, but it's still riding the 21. Well, Justin, the original... Back, if you were in boot camp in 2000 and, well, no, I think 2006, we had an ongoing challenge that year of coming up with names for yachts, and Ride the Five was a good one because we paid a lot of attention to the daily 5 EMA. So I used to scream and shout, "Ride the 5, baby, ride the 5," right? So that was a good name for the yacht, huh? But we had some pretty cool names for. I can't quite think of them. I'd really have to sit. I probably need an old fashioned and a cigar, and I can figure it out. But yeah. But in this case, you know, well, I mean, let's do a quick experiment. Let me explain. Let's just move over to dollar yen. Okay. Let's mark this. That's the 4-hour 21. Okay. And then we go to the daily, and it's the daily 5. You see? Oh, I'm sorry. Did your head just explode? Look, there's the 4-hour 21 EMA. And then when I go to daily, it's the daily 5 EMA. So when I'm showing you the importance of the 21, it's not actually the 21. I'm fooling you. It's the daily 5. So going on Justin's comment about the 21 EMA yacht. No. in 2005, 2006, if you were a member of FX Bootcamp, you were riding the 5, which is riding the 21, just on a different time frame. And now you might start appreciating, too, the math behind my chart templates. You're like, wait, what? This is estimating tomorrow's 5 EMA trade. Oh, shut up. Yeah, dude. Dude, multiple time frame analysis. That's not the 21 EMA. That's the daily 5 on a 4-hour. Oh, God. Yeah. That's cray-cray, huh? Yeah. No, it's important stuff. I stink. Boom. Right? So how about this one? Oh, snap. Stop it. Wait, the 200 EMA on the 1 hour is the 55 on the 4. Oh. Oh. I thought these were just random numbers, Wayne. Nope. No. I mean, it's cool, isn't it? When you start looking at it, you're like, wait, there's reasons why you follow these moving averages? Uh-huh. So I'm basically doing multiple time frame analysis on one time frame. Right? Anyways, let's go back to this. This is a trade I did this morning, in fact. So last night, I took 150 pips off this trade because I was long. Oh, I don't know. I think this original trade, I can't remember. I was long. I survived this and went up. I locked in a bunch of profits. It came down last night because I was worried about, what was going to happen when Asia and Europe wakes up and they want to trade the Wagner trade or something, right? I'm like, you know what? I don't want to, I don't know. So I locked in 150 pips. It came all the way down while I was sleeping, knocked me out for 150 pip profit. Nice. And then I look at it this morning and I'm like, oh, we're sitting on the 4-hour 21. Oh, I want to own that. So now I've bought it. It's rallied up. I've done good. I'll move my stop. And I'm back to hero or zero. I can only get richer. Huh? Cool. Huh? Hero or zero. Thank you, Euro. But remember, QuantBox set all of this up fundamentally. Remember, we said Euro CAD. We said Euro yen, pound yen, CAD yen, and I think Swissy yen are all the maybes, right? So far, Euro and CAD are winner chicken dinners. Pound hasn't shown up yet, but we'll see how it goes. If it avoids the down, then there's going to be some up, and I'll buy some dippy dips. That's my job. Okay, remember QuantBox said check this one out. If you're a bull, buy the dips. Okay, not quite to the 4-hour 21, but right into the daily. There's the daily buy zone, and that shows aggressive buying. So now let's say you're a day trader. Wayne, I don't swing none. Okay, well then check this out. Okay, today's target for this trade is here. in the cluster of last week's target, this month's pivot, R3, which is the big one, the weekly R1, and the daily bullish profit zone aggressive target, which is labeled on the chart 161.5280-ish. So let's just call it 161.5. If you're so lucky to get the up, so let's do it this way. If you're so lucky that your day plays out like this, that confluence is probably where you want to take your profit. Cash, I know what you're saying, and I don't believe it's, how you say, I don't believe it's the majority opinion yet, but it's a very astute point to make. So I agree with you. It's important, and that might be what's happening. It might be coming down the pipeline, but I don't know if it's yet. So you can have that theory, but I wouldn't trade it against the strongest ones. So what you're suggesting is yen strength, right? So if you are a member of QuantBox, we've already discussed this hours ago. 2 hours ago, we already talked about this. Oh my God, 2 hours ago. But anyways, what you can, so anyways, if you're not a member of QuantBox, on the QuantBox YouTube site, right? So youtube.com/@QuantBox. At 10 a.m. it'll be released, the video. And so anyways, we discuss it. So make sure you check out that video. In fact, I'll post it here, just the link, http, oh, I can't see it, youtube.com/@QuantBox. Okay, so at 10 a.m. that video will be released. Of course, you could just subscribe to QuantBox and attend live. So anyways, we discussed that. Let me bring up the Bank of Japan. The summary of, anyway, snip, let me snip, snip doggy dog. Okay. I'm going to snippy that, and then I'm going to linky that. I'll show you some of the awesomeness of FX Bootcamp, by the way. Communities, and I'll go to challenges. Challenge. It's a bit of a quirky system. Why is it doing this? Am I not? Okay. Anyways, it's a bit of a quirky system, but it's all good. So I can do a new challenge. One-time challenge. And you got, I'll give you 3 days. Next. Custom challenge. And we call this Bank of Japan Summary of Opinions. Okay. Will the YCC change in the next few meetings? Okay, now you're going to ask yourself that and answer that. And this will go to everyone in the FX Bootcamp community, even video-only members. That's perfectly fine. Next, I'll upload that photo. So where did my screen snip went? Okay, I'm going to save that. Snippy snip, 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 snip. Cool. This one, boop, boop. Cool. If you don't know, that's what the Bank of Japan looks like. Cool. Now, this is why I say it's quirky. Now I have to go and edit it and then post it to everybody. No, it's not that one. It's this one. Fundamental challenges. It doesn't even ask me. So anyways, boom. So we got that. So now I have these challenges, and check this out. So here's the fundamental challenges that FX boot campers can do. Okay, and these are the important things you're supposed to be reviewing. And so now, like, if you're a boot camper, you know to review the Reserve Bank of Australia meeting minutes, review the actual CPI report. Oh, you know what? I forgot to put the link in, didn't I? For the Bank of Japan. So let me edit that. I forgot. Sorry. Read the report. Cool. Okay, so now as you do the stuff you're supposed to be doing as a currency trader, read the CPI, read the monetary statement, read the Bank of England monetary policy summary, read the Bank of Japan summary of opinions, read this week's report, and read this retail sales, read this OPEC video. So I'm pushing you in the right direction, but as you do it, you get points, and your points accumulate so that you can be part of the leaderboard, huh? Isn't this sweet? It's awesome. And you're doing the right thing right? You're doing the right things, like reading the summary of opinions and thinking about it and posting your opinion, which allows you, by the way, oops, let me put it back. By the way, let me go back to the challenges. So you do your challenge, right? So you join, and it tracks that. Right? You read what you're supposed to read, then you share your thoughts, and then when it's done, you're able to see what other people think after you've written your thoughts. It's good. I'm telling you, it's good. You're going to learn how to trade Forex properly, I'll tell you that much, because you're doing the right thing. You're not just listening to me. You're becoming your own independent trader. So you're like, ooh, now I know what he reads to stay informed. So anyways, boom, boom. So again, if you got $88 in your pocket and you want to learn how to trade properly, I think it's a wise investment. Let me just put it that way. Japanese stock market's still coming down hard. It's definitely technically bearish. Oh God. Very, very bearish here. And yet the yen is still weak. But notice all of this. I don't have my drawing tool. You see the down, the up, and the down? I did that 2 weeks ago. It looks like I just drew it yesterday or today. No. I did that way over here. No joke. Yeah. What's surprising is that the yen is actually still weak in a scenario like this. Typically, I would expect yen strength. So for those that believe yen strength is coming, I do not disagree with you. It just isn't happening today. My job isn't to short a rising market because I'm smarter than the market. And I'm like, I think the Nikkei is coming down, therefore I'm going to short all the yen pairs that are in a clear bullish move. No. But if those yen pairs turn south, I totally understand why, and I'm smart enough to take profit and get out. So right now I can't lose money anyway, so who cares? But the thing is, I know if I'm observing the Nikkei falling, so again, if I observe this, that makes me want to buy yen, but I then know through analysis or through QuantBox that the ones not to short are yen, CAD, or sorry, euro, CAD, pound, and Swissy. So that says, well, then I have the opportunity to think about selling Kiwi yen or Aussie yen if the moment arises. And so I look at Kiwi and I'm like, okay, it's close. It's triple topping as everything else is making higher highs. So if suddenly we roll over and start having down days in the yen pairs, well, I don't want to sell CAD yen. It's one of the most bullish, but maybe I pick on Kiwi, huh? And I'm like, yeah. So you want to be like the bully in the playground. You got to find the weak, scrawny kids, right? So so you have Kiwi yen, but what about ASE? Where's my ASE? No. Yeah. Okay. And how about that one? Even better than the real thing. You've been living underground, eating from a can. You've been running from Wayne, 'cause you don't understand trades. All right, cool. You see, like I would not sell Euro yen, but Aussie yen? And you're tracking the Nikkei? And you're like, man. And look at, bears took it. They sold it at the central. They sold it at the 21. They're taking this down. We just don't know if they're right, but I understand what they're doing. So bears need to find the weaklings. The bulls need to find the bully. Okay? The strong ones, because they want to sell the Japanese yen. So it just comes down. So again, you could read the summary of opinions and say, based on the summary of opinions, I want to buy yen. Good. Don't buy Euro yen first or CAD yen first. That doesn't make any sense. Right? Or sell those, I mean. But you could sell Aussie yen, and that makes sense. And you're not getting in the way of the bulls. You see? So what's your reason? Are you tracking the Nikkei? Are you adjusting for YCC because of the summary of opinions? And then you need to decide how to structure your trade. If your summary of opinions make you a bull on the Japanese yen, then you need to structure your trade with something weak. Okay? What about seasonality? You might say, Wayne, look at the seasonality. I'm like, okay. And you're like, based on your analysis, maybe you want to sell the yen or buy the yen. It's up to you. You have to make your decision. And therefore, then you got to structure the trade. Okay? So Cash wants to focus on kitty cat yen. Sweet. Okay? I think where a lot of amateur traders go wrong is they just trade the same thing all the time. Euro dollar, USD yen or something, right? And that's it. And that's 90% of their trades. And they'll trade it when it's a good trade, they'll trade it when it's a mediocre trade, and they'll trade it when it's a bad trade. And you're like, huh. Okay? Okay, if you look at the smart money tracker at quantbox.co or the commitment of traders report at the cftc.gov, you'll see some money has been coming out of WTI. Not long ago, it was like 80% long, and now it's only 60% long. Yeah, something's happening. I've been saying for quite some time that I think we're in a range, and it hasn't been neither here nor there, but recently, okay, you see, Friday got you to support, and now it'd be like hero or zero. Up here, you're vulnerable to the lower low. So if you bought the dip at the bottom of the range, you would jam your stop and pray. Praying won't hurt. Okay, a bear would have to be very aggressive to sell here. You're selling it and you're like, we're going from 70 to 60. Well, that's not there technically. That's not what the technical charts say. So you'd have to have some other reason for it. Okay, cool. So if you would have to say, we're going 70 to 60, and if you're confident in that, you're going to set this up like that. Okay, so it's interesting, right? So a bull already bought it, and praying never hurts. Bears, if they're very aggressive, can start setting up the July trade. Notice it's basically a July trade. And if it's a July trade, we're actually taking it down to maybe, I mean, oil trades vary psychologically, but what the chart says currently is 62.5. Now, if it makes a lower low by the end of the week, it's going to pull everything down, and we'll probably go more like 60. Okay, and that would give you a breakout type trade. So you need to decide now, not after it happens, son. If it's happened, you're adding no value whatsoever. And we're in the business of value creation. So I hope you spent the whole weekend analyzing and thinking about WTI. Did you get the rig count? Okay. Okay. Frank says, won't you take? What do you mean me? I'm not talking about me. Okay. I'm not telling you this is going down, Frank. I don't tell you what you should think. I'm asking you, what do you think? So if you're saying, well, how about the Saudi oil cut? Okay, well then you're already in this trade with your stop at break even. Okay? And if you're a bull and you didn't buy it on Friday, I would ask you, well, what is it that you do then? You're not really a bull if you didn't have this set up. You're like, you didn't buy it at support in a range? Well, then what makes you bullish if you didn't buy it? Okay? So what I'm saying to you is if you're a bull, you need to jam your stop because there's real risk to the downside that not everybody agrees with you. So they're going to dump it. And they're going to take it down. And what a bear is thinking is 60. Okay, Frank? So even if you're a bull, you need to understand that you're vulnerable. They're coming for you. So you need to manage your risk. You need to manage your trade, understanding what the enemy is about to do. You're going to get ambushed. Okay? So you have to understand the enemy. Okay? Everything on this chart, right, looks all right for a bear, although if I was a bear, I would be, I don't know. It's hard because it is range bound. So you'd have to, like, that's the thing. If you were working for me and you were getting short or asking permission to get short, if I was your boss, I'm like, dude, this is range bound. What do you mean? Why would you trade this? It's not even in the middle. Like, why would you trade this so low? Why would you sell this near support in a long-term range? And you're like, well, I spent all weekend analyzing the fundamentals. And I found point number 1, point number 2, point number 3. Therefore, I want to take a shot selling it from 70 and taking it down somewhere between 62 and 60. And I will say, oh, snap, boy. Okay, that is some good analysis. Take the shot. But when someone else is like, oh, I don't know, is it in a range? Really? I never thought about it. I just logged in and, I don't know, the monthly central pivot. Oh my God, seriously? Right, that's what I would say if I was your manager. You're like, we're in a range, and your whole thing is you're going to sell it at the central pivot. Who cares about the central pivot? Oh, well, I thought you were supposed to sell it at the central pivot. No, I need you to think. Okay? So, for example, in the training courses, it does say that is a selling zone. So you're like, well, Wayne, isn't that a selling zone? Well, what kind of market do you use pivot points in? A trending market, because it doesn't define if you're a bull or a bear. You have to set up and use your pivot points based on if you're a bull or a bear. But I've identified this as range bound. You don't use pivot points in a range bound market. It's a trending tool. So you better be able to defend why you think this is bearish. So if you defend it and you're like, I got 3 solid reasons. I thought about this and I have some intel and I really believe this is going to break out to the downside. We're going to break the range and I'll tell you why. And then you defend it and I'm like, snap. All right, good. Take a shot. But if your answer is, I want it, I don't know, is this central pivot? No, it's so simple. That kind of analysis is so simple and so basic. I could just have an EA program for $5 and replace you. Because you're not adding any value. If I can replace you for $5, like have an EA that says sell at every central pivot point, well then shoot, I can replace you. You're not adding any value because the value proposition is when and when not to. You see what I mean? When and when not to sell at the central pivot point. Well, I can't teach an EA that. Okay? So I'm going to need your, not AI, but I'm going to need your intelligence, your thoughtfulness, your ability to think ahead. And so you're like, well, Wayne, if you take into account what OPEC is saying, and when you take into account this geopolitical risk, and you take into account this change in supply, and you take into account some seasonality, and you take into account some sort of pattern, I think this is setting up for a breakout. Well, shoot, I don't know the future any more than you, and if I pay you to do that kind of analysis and research and come up with an opinion, and you have the technical capability of structuring this trade properly, setting up the trade properly, taking the trade properly, and managing the risk properly, well, most of the time we're going to win. I trust you. Do it. And all that is value creation. You see? So always ask yourself, are you just doing what like here's the thing. If I can just program an EA that says, sell at every central pivot point, then if that's all you're doing, imagine that it will never fail at doing that. Where if that's all you do and you could possibly fail, remember, the EA will never fail at doing that. If you program it to say, sell at this pivot point, buy at that pivot point, it'll do it 100% of the time. So if that's all you do is mechanically trade based on some basic rules for hardly any money, let's say 25 bucks. I can replace you with something that is doing what you're trying to do better than you can do it. So then your trading career is worth less than 25 bucks. So then you're like, oh God. So wouldn't it be interesting if you had an EA? Let's say, I'm not promoting like you need an EA, but I just want you to think the difference. What if you were the one that was doing the research and you came up with the opinion to be a bull or a bear? Okay, let's just pick on something different here. On gold, okay? Should you be a buyer or should you be a seller? That's all fundamental analysis is. And you do heavy research. And you know everything there is about gold, everything. Good. What kind of value would you possibly add? Or what kind of value are you trying to add? Okay, so let's go here. Let's do position. And your job now is to decide, are you a bear or are you a bull? Are you a bear? Are you a bull? Are you a bear or are you a bull? That is your job. That's your job. That's it. The EA isn't very reliable. You'd have to give it basic rules like a moving average crossover or something, but that's so slow and stupid. Come on, man. You should be able to think forward and have opinions based on your research. And you're like, you know what, Wayne, I am a long-term bear on gold, meaning over the next few months, based on my research. And then you use an EA. And your EA says, when you get to, like, go back to when you set this, let's say after this peak, your job is to say somewhere around here you want to get short. Well, shoot. But you already knew to get short because you know why, and you can think forward, and you're like, we're in a disinflationary period right now. You thought about it, so now you just turn your EA on and say, somewhere around here, sell it. Sweet. And what about now? Yeah, somewhere around here, sell it. That's it. That's it. Okay? Right. Right, yeah, if you're using like a moving average crossover, that's what I was saying. It's so slow that you're always out of position because you, and by the way, like I said, most people are waiting for those crossovers. They don't do it well. So I could at least have a computer program that will do it perfectly, right? So why would you focus on that as a trader, sitting there staring at like a MACD cross or something, when you should be thinking about what's going to happen tomorrow or next week? So again, on July 7th at 10:30 in the morning, I'm going to tell you what's going to happen over the next 3 months based on my research. I don't know if it's going to happen. Okay? But I'll show you how to put together a thought processes, right? A thought process. Okay? I don't want to tell you what to think. I want to teach you how to think. Okay? And you can disagree with me. That's perfectly fine. I just don't want to hear from you. You can just sit there and go, okay, well, he's totally wrong, but that's okay. Totally okay. I mean, some of my best conversations with, when I get together with other fund managers and stuff, it's when we disagree that's really interesting. Right? I got accused of being a perma bull on the dollar one time. I'm at a fancy dinner, eating a fancy steak, drinking fancy wine, and he's like, I know what happened to you. I'm like, what? He's like, you started trading Forex in the early days of 2000, And all you did was sell the dollar every day to buy the euro. And I'm like, yeah, well, that's true. He's like, you're just a perma bear on the dollar. He's like, you can't even see the dollar coming, the strength coming. I'm like, well, actually, I can see the strength coming, and I know seasonally it's coming up. He's like, nah, you're a perma bear, right? And we have these discussions, and then you get into it, right? Like, that's a true story. You know, he pointing fingers at perma bear, and I'm like, I don't think I'm a perma bear. I'm a teddy bear, but not a perma bear, right? And so, you know, why do you like this? Why do you like that? Oh, I totally disagree with you, right? And you get into it, and you learn way more about that, about trading from the disagreements, right? So the value, if you're ever going to be a professional or trade like a professional, the value creation is in your research and analysis first, but we don't start there as traders, right? We begin with technical analysis and trade execution. Unfortunately, you spend your first 5 or 10 years learning trade execution without any real strategy. So what happens? You get really, really good at technical analysis, but you don't have consistent returns. And then you go around in circles where you're like, well, for 6 months it was pretty good, and then I gave it all away. So I'm going to get rid of my oscillators, and I'll get rid of MACD and stochastics, but I'll add RSI and CCI. And then you go on and you do pretty good for 6 months, and then then all of a sudden your decent returns go mediocre again. You're like, I'm going to get rid of CCI and RSI. In fact, I'll get rid of oscillators altogether. So I'll use some Elliott wave, and I'll use some Fibonacci, which is Elliott wave anyways, and I'll change my moving averages. And after a while, you do mediocre, then you do better, and you have a decent 6 months, and then it goes mediocre again. But see, what's happening is your technical analysis is totally fine. I don't care what you use. Use what I use. Use what somebody else uses. If they're a successful trader, it's going to work. But what's changing in the background is the fundamentals like seasonality, like macroeconomics, like monetary policy, like something simple like the summary of opinions from the Bank of Japan, and snap! The weakest currency in the world suddenly is gaining some strength. Well, your chart didn't tell you that, your RSI didn't tell you that, your Elliott wave didn't tell you that, and someone else might say, yeah, it was Elliott wave. Well, okay, maybe. But it's not why it happened, but it does describe maybe the structure of the market, right? So anyways, it's somewhat true, but not mostly true, right? So anyways, we start learning how to trade through execution, but unfortunately without any strategy. And it doesn't matter how good you are with your weapon. Okay? A Russian soldier in the middle of the eastern Ukrainian forest that has no strategic plan from the military generals, poor supply chains. So he's got no food and no water, no bullets. Okay? Kind of has bad morale, huh? But he's got, I don't know what, he's got a decent weapon in his hand. Okay? But dude, at some point you need a strategy, you know, like it doesn't matter how well trained you are with your weapon. If you're out of food and water and you're reading stories about your fellow soldiers retreating and defecting, you're like, your morale is shot, and you're like, what is our strategy, right? So anyways, at some point boot camp is about, in the beginning of FX boot camp, right? The beginning is you got to learn your technicals and all that kind of stuff. Sure. But as you mature as a trader, you need to have that strategy. You need to be able to be the general and the foot soldier, the officer and the grunt. You have to do both. Okay, and my proposition to summarize this tyrant is that the rationale behind your trading is way more important than the technical analysis. Okay? People often ask me, well, how do you get to the actual point where you want to sell? I'm like, what, you want to sell gold here? Yeah. Is it near resistance? Yeah. Well, do you sell this and do you go on the smaller time frame? No, you just sell it like that. That wasn't hard. And then you got to manage your risk, right? Okay, that wasn't hard. So look, I sold a retracement. So what's my trade plan here? I'm a bear and I want to sell near there and my target is there. Oh. But why do I want to be a bear? That's way more important. Could I enter this better? Could I enter it more precise and all that kind of stuff? Oh, yeah. Yeah. Could I wait for the 21.55 cross on a 15-minute? Oh, for sure. Yeah, that would be better. Okay. Yeah. But ultimately, on the long run, that doesn't matter. That's not because you know, if you're pure, right, technical analysis only, the best lead to mediocrity. Not failure. You can do all right, but you have to be really good at pure technical analysis. And there are a lot of you that are very good. There are professionals that are very, very, very good at pure technicals. And they'll tell you everything's just in the price and stuff. Okay? But what I'm saying is not that my way is the best way and everyone else is stupid. What I'm saying is to get peak performance, peak efficiency, is to refine or smooth out your returns through a bias filter. Okay? And my God, I gotta get this link for you. Hang on. Let me bring up the YouTube link. Where is it on here? Where's this streaming to? Well, I guess I'll do it this way. I'll go to this link. This is ultimately where I'm trying. You got to watch this video if you haven't done it yet. I know it's a little bit of self-promotion, but it's real information. And the first hour and a half is great. And the second half an hour is a bit of a sales pitch. So skip it, buy it. I don't care. Do whatever you want. But you got to watch this because it puts it into context. Okay? The fact that you can get to a peak performance versus a good performance and having a level of confidence. I mean, if you want to be a confident trader, you got to have the ability to be able to filter the technicals so that you can get the peak return. Because if you're only technical, in much of what you end up getting, because like, let's say if you use a lot of moving averages, as someone pointed out earlier, they are lagging. So what happens by lagging means you always get in a little bit late and you always get out a little bit late. So your profit is sitting in the middle of the range. Okay. But what if you only sold at the top of the range in a bearish market and exited at the bottom of the range, or sold and then removed the risk and just leave it because of the filtering process? Well, then your entry is more precise, but you're more confident in your trade, because I would ask you, well, why did you sell gold? Oh, let me give you 5 reasons. You see? How do you feel like as a trader if you have 5 solid reasons based on your research why you should sell gold? So when you sell gold, how do you feel about it emotionally, psychologically? The fact that you've done the research, the fact that you have a solid opinion, the fact that you can have a conversation and even an argument over whether you should be long gold or not. Because you know you're going to meet someone and they're like, what do you mean you're shorting gold? Inflation, inflation. We're still at 5% inflation. Oh my God, what are you doing? And you're like, that might be true, but let me share you my point. If you look at point 1, point 2, point 3, point 4, point 5, I believe over this period of time, boom, 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 I'm going to be short. Sweet. That's what you want to get to. And then what moving average you use that you use? What chart? Oh, you use the 4-hour. I only use the daily. You're wrong, right? No, it doesn't matter. It just changes your entries and your exits slightly. But what matters the most valuable, because again, I can just pay somebody to develop an EA that says, sell the 2155 cross. Done. I don't need you to do that. I can pay $25 once and have it do it for years. What do I have to pay you? A lot more than that. So if that's all that's worth, you shouldn't be focusing on that down the road. In the beginning, you need to learn how the market trades. That's what technical analysis is. So you refine the price and time in which you buy or sell. But the buy and sell decision is your value creation. And that's what you want. Right? You don't hire Goldman Sachs because they have good technical indicators. You hire them because they have the best research. Or so on and so forth, right? Okay? And look at all the money I'm making on gold. All right, cool. Could I have done this better? Yeah. But if you have a good strategy, okay? If you have a good strategy, mediocre trades tend to still do okay. But if you have great technicals and no fundamental strategy, you have to be very, very good to come out with a mediocre outcome, which means most people are not that good. So you're probably not going to come out with a favorable outcome based on your expectations. Okay. This is great. This is the S&P 500 coming down. Love it. Sweet. I'm well positioned. I took profit a week or two ago on a bunch of positions, and I've rolled over into more hedged positions. And I am super happy. Okay. Okay. No matter what happens over the next 12 months, I'm going to make, I think it's 9.75%. I don't care if the stock market goes up or down. That's what I'm going to earn minimum. If it goes up, I'm happy. I'm happier if it goes up than down. But if it drops or moves sideways for the next 12 months, so we go to, let's say 35, and then we go to 4,000, then 35, and then 4,000, and, back and forth between 35 and 45 for the next year and a half. So for, let's say 18 months, this moves basically sideways. I don't care at all. I'll make 15% in 18 months. Even if the stock market doesn't make a higher high, doesn't make a lower low. So what's the low? 36? What's the top now? 45? So we just fart around for a year and a half to 2 years. I'm okay. I'm going to make 15%. Done. Done. If it goes up, I'll make more. But it doesn't matter because right? But whatever. So, awesomeness. Super happy. Love it. So, what's my job now as a portfolio manager? I have to decide what's going to happen in the next 3 months. And then I have to position the portfolio properly. So I did that a week and a half ago. A week ago? Well, let's say some of it was 2 weeks ago, maybe 3 weeks ago. And then I finished rebalancing last week, which just happened to be probably a day or two from the top. Okay? So now I've rebalanced my entire portfolio based on my outlook for the next 90 days. And of course, you don't wait for it to happen. You do it before it happens. So really, I'm thinking 100 days in advance. Okay? And I already know what I would like to see in the fourth quarter. So this is how you manage as a fund manager. You're thinking about how do you balance your strategies? Which strategies? Okay? So there's 5 strategies for the portfolio based on what I believe is going to happen in the next 3 months in Q3. And when I approach Q4, so let's say middle of September or the big early part of September even, I'm going to start rebalancing the portfolio based on the new quarter going into the fourth. How I'll look at all the fundamentals, I'll look at all the macros, I'll make decisions technically and say, I believe October, November, and December are highly likely to do, let's say, up or down or sideways. And based on that opinion, I look at what should be in the portfolio based on that decision. So if I think up, I'll have to get out of some of those positions and add different positions. If I think sideways, I'll have to get out of other positions and enter different new positions. If I thought down, once again, I'd have to decide, okay, what do I put in? What do I take out? This one goes to cash. This one goes into something different. But notice I'm thinking 3 and 6 months ahead. When we're looking at, like, should I own the S&P 500 or should I hedge it? Should I cash out? That's our job. That's my value creation, right? That's your value creation. And then once you have that decided, the technical analysis becomes clearer and your confidence grows. How many people here, and I want you to answer, I'd like to see a lot of answers here. How many people here would like to be a more confident trader? Show me how important you believe confidence is. Okay? Let me know in the chat. Remember, you're communicating to yourself. Don't worry about me. Don't worry about everyone else in the chat. You're communicating to your subconscious. How many people want to be more confident as a trader? How important do you believe confidence is to your success as a trader and investor? And does it come from the fact you think you're good enough and you're smart enough and gosh darn it, people like you? You were just born to be a successful trader. You just know it. Or do you have to earn your confidence? How do you know if you found success that you wouldn't screw it up? We call that self-sabotage. If you accidentally stepped in it, oh my God, I think I stepped onto success. How did I do that? Okay, if you lack the confidence, you will self-sabotage. You will invent new ways to lose money that no one else has ever invented before. Because you don't know why you're successful. It scares the crap out of you. So how do you avoid self-sabotage? You've earned it. You know it. You're confident. Okay? And that is going to come through fundamentals first because you have a rational reason why you're doing what you're doing. You know why you're selling gold. Oh, so much easier. Because then you can watch gold rally and say, dude, when I hit this roll reversal, I'm going to get short. Okay? So you're ready, willing, and able, way ahead of the market. And when you take it, you're like, nice. Okay? But watch that QuantBox video. Let me post it again. I'm telling you, this, when you go through this, it's that type of research that will make you a better trader because of your confidence, but also what happens when you're a confident trader. Think of the cliche of why traders are not successful. Okay? They have huge losses and tiny wins. They don't have the strength, fortitude, experience, knowledge to take a loss. They have some emotional attachment to winning. They would rather lose big than take a loss, than a small loss, right? It's ass backwards. Okay? But also, you've seen people that are like, oh my God, I hit 100 pips. And they're like, out. Why did you get out? It's 100 pips. Or even 50 pips. Some people freak out. Oh my God, I got 50 pips. Out. Why'd you get out? Oh my God, 50 pips. Really? But it shows you they don't know why they're in it. They don't know where it's going. How about people that like, and this can be an opinion on risk management. So my opinion is if you know where the target is, go for the target. A lot of people, what they like to do is take half the profit early and then let the other half run. But I don't like that at all. And here's how I look at that logic. Why do you want to get out now? Well, at least I book half my money. Well, if you want to get out now, why would you let the other half run? Well, I don't know. It could keep going. So you're just telling me you have no idea. You took the trade, you risked a certain amount of pips. I don't know how many pips your stop is. And you have no idea what the value of this potential opportunity is. You're like, I don't know. It could be 25 pips. It could be 250. How would I know? Oh my God. That's so terrible to me. Okay. Why do you talk beta yet preach alpha? Well, Cash, it's your opinion that creates the alpha. But what do you want to know more about alpha? I'm going to wrap up today, Cash, but let me know specifically more what you're saying. You're saying fundamental analysis and technical analysis is just beta. Why talk about beta yet preach alpha? Well, okay, well, flesh that out and maybe I'll talk about it tomorrow. Okay, so I'm not quite following you, but I think you're asking something good. Flesh that out a little bit for me. I'll bid everyone to do, and I'll try to address it, but I'm not quite following, but it smells good. Okay? So everybody else, thank you for being here. Thank you for your contribution to this wonderful community we call Forex.Today. Amazing coming for those that are part of FX Bootcamp, part of QuantBox. Amazing things coming. Amazing, huge stuff. Great. And to Traders Way clients, thumbs up to you. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. If you're in my day trading group, I will see you at 4 p.m. to plan out tomorrow. Cool. Oh, here's an ad. That's for YouTube. YouTube, I'm making you rich. Promote this channel, YouTube. Cheers.